Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny Bert. The Dividend Diplomats. My mic is back working today after a rough video on Thursday, so thanks for hanging in there with us, everybody. From time to time it happens, but now that you can hear me loud and
Hey,
clear,
but you guys take it easy
yeah,
though.
yeah, take it easy, guys. It happens. It happens. But now that you can hear me talk about the two stocks on my dividend watch list over the next couple weeks. Get ready. We got two potentially undervalued dividend growth stocks that we're going to feature right now.
Guys, before we do, mic check 1, 2, smash that subscribe button, give Bert the hurt and Lanny a nice thumbs up. We're recording this here on January 11th, hitting it hard at 10:30 at night because dividends don't sleep, baby. And Bert's got two dividend stocks he owns. And damn it, I'll say it here. These look like two great stocks to buy right now.
Yeah, so how are we going to talk about these companies? We're going to briefly go through them. We'll talk about some of the positions I already have in them because I do own both of these companies already. So both these would be potential additions to my baseline position right now. We're going to run them through the stock screener, which features three metrics and a bonus metric: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. You pumped up, Lanny? You pumped up to talk about these two?
You know it, Bert.
All right.
I'm ready. I'm ready. Now, to start there, you own both of these stocks.
That is correct.
Do you own 100 shares yet of both of these stocks?
No, sir.
And guys, you might hear us talk about 100 shares a lot. We want to buy undervalued dividend stocks, but we also love the option to write covered call options to generate more income. That's what Bert likes to look for. It's what I like to look for. But it also just feels good sometimes to own that triple digit share count. So if you own 100 shares of Berkshire Hathaway, let us know in the comments below. Berk A, not Berk B. But Bert, man, mm, I was on my way to work today. I looked to my left and I just did one of these.
Yeah, because we're going to talk about Starbucks, ticker symbol SBUX. Not going to go into too much detail because we just featured them on our channel here on Tuesday. So we don't want to spend too much time saying the same thing. But at a very quick high level, strong sales growth, strong earnings growth, strong store growth, and strong membership growth. They're firing on all cylinders. And as Lanny alluded to, you go buy a Starbucks, they're never empty. You never see a Starbucks empty. They're always packed. They have strong brand loyalty. It's a great sign. It's a great sign for the company.
And on top of that, inflation, when it comes to consumer, staples such as Starbucks, typically, as long as they have a good loyal base and their product is good, they can usually pass those increasing costs right to the consumer.
Yeah, it
And that's
hasn't slowed
exactly
down
what's happened.
I say it hasn't slowed down the people I know that go to Starbucks. They still get their order.
And that is why Q4 revenue is also up over 11% year over year.
That's right. So I talked in the last video how going into the week we own 91.34 shares. We wanted to get to 100, so it was a little less than $1,000 to do it. We haven't gotten there yet, but we did grab three shares,
Ooh,
the three on the platter right there. That's what it's about. So we're up to 94, closing in on 95, and I'm getting very close to just punching this one over the 100 share mark because I'm still liking the metrics for Starbucks.
and you know what, Bert? If we take a look at just the dividend payment date, you've got one coming in February. You grab the shares before the X date. So you have 95 shares producing 57 cents. You have 54 bucks coming. So you already have a half a share for sure in the ball cap.
Yeah, that's right. So it's not going to be hard to do. It's not a ton of capital to put in. But let's see the metrics to see why exactly I'm
Let's
liking
do it. Let's
Starbucks.
do
Their
it.
price is 92.94, so they're very flat from where they were when we featured them on Tuesday. They haven't done much. Their PE ratio is 22.5. And as we continue to discuss, their historical PE ratio is in like the 25 to 30. They're a high PE company, so they're undervalued slightly compared to the market, but they're undervalued compared to that historical benchmark that Starbucks has set.
They do have typically a high PE benchmark, but that's okay because 22 and a half is fairly low when it comes to Starbucks, as Bert
Yeah.
indicated. dividend payout ratio, guys, they're at 55% based on a $2.28, 57 cents per share per quarter dividend. Could reinvest back in the business, fits in our perfect payout ratio, between 40 and 60%, albeit it's getting a little bit tighter right now on Starbucks. But Bert, they've been growing dividends again for what, 13 years here?
Yeah, that's right. With a 10.35% 5-year dividend growth, yes, they have a nice double-digit DGR, which is beautiful. When you couple that with their 2.45% dividend yield.
Tell you what, yeah, it's a good combination. And hey, what price point were you able to grab a few shares, Bert?
It was right around in the 93, 92 range. Like it really hasn't moved that much this week.
Nice, nice.
Yeah.
When you look at the dividend yield at 2.45, the 5-year average yield's 1.92. So you're talking a 53 basis point premium on a 1.92%. That's a pretty
Yeah.
nice premium to the 5-year average dividend yield.
Yeah. So look, their PE is 22.5. Their payout ratio is 55, 56. 5-year dividend growth rate's 10.35 with a 13 plus dividend increase streak and a yield of 2.45%. They're down 2.7%. That's why we're liking Starbucks here. And we're like very likely going to get to 100 shares soon, especially at these prices.
Yeah, Bert's a looking and he's a liking. But Bert, you had two
Yeah.
stocks here, guys. Guys, we're featuring two stocks. We typically like to feature a few each video. And
Ooh.
what we've been doing recently, if you guys haven't caught it, is we try to focus on current positions as well, because this might be the year of cleanup on our portfolios for both Bert and I, and the buildup of quality stocks like Starbucks and like this next company.
Yeah, we haven't featured them on our channel for a long, long time. They're one of my earlier stocks, Laney. They are one of the first stocks I purchased. I grabbed
Been a
them
great one.
August.
Been a great one.
Yes, I love the performance. I grabbed them August 1st, 2013. I grabbed 29 shares, it dripped to over 31, 32 shares. We're going to be talking today about AEP, ticker symbol AEP, headquartered in Columbus, Ohio. The utility giant has found its way back onto my dividend stock watch list. And you know what? Yeah, we have come back to Bert's watch list. I logged in to Seeking Alpha after work today. I was like, let me see what's happening. I see utilities get smacked because inflation was hot. So I took one look at AEP and I'm like, let's see what happened here. And they were down over 2%. So it's like, screw it. Let's run them through the screener and see why they're on the watch list.
Do it. Do it.
Do it.
Do it.
All right, let's let it rip. Their price is 80.40. Earnings per share is 561. That's a PE ratio of only 14.33x.
Woo! Bert's doing the Ric Flair chest slaps over there, guys. But when we look at the dividend payout ratio, they pay about 88 cents per share per quarter, 352 per year, 63% payout ratio for this utility player. You guys might be like, whoa, that's over the 60% threshold, guys. But no. That's actually for a utility player, it's usually on the higher mark, lower growth business model. So they typically pay more of their earnings out to the shareholder. So this doesn't scare me at all with AEP.
No, not one bit. Their 5-year dividend growth rate is 5.9%. They've increased that dividend for 14 years. Their last dividend increase was remarkably consistent with their average. It was a 6% increase that was announced in Q4. That's their story. Consistent earnings growth, consistent dividend growth. That's what AEP loves to do.
Dividend yield now is swollen to 4.38% because somehow, they're down 17% since this time last year, which is pretty amazing. Hold on, what is that? You got the 5-year average yield from Starbucks, I think.
Oh, yeah.
When I saw that, I was like, oh, I was like, wow,
Yankees, no chance.
342. Got it. All right. 3. And then when you look at that 5-year average yield, 3.42, and it's at 4.38. So you're definitely getting a nice premium right now to AEP. That's awesome.
Yeah, it's a great company. So just to summarize metrics, and we'll do one more thing about AEP and their dividend growth over time. PE ratio is 14, payout ratio is 62%, 5.90%, 14 years increasing dividend with a yield of 4.38%.
Yeah, and guys, you got to hear Bert. Guys, grab a drink right now because listen to Bert. He's going to
Yeah.
rewind the tape back 10 years ago.
Yeah, Lanny asked an interesting question. So we did some research here right before we did it. He was asked, well, what's the yield and what was the dividend when you purchased it? So I looked back. When I bought them August 1st, 2013, their quarterly dividend was 49 cents. So an annual dividend of $1.96. I bought them at 46.90. So at the time of the purchase, they were yielding 4.18%. Now, fast forward, their annual dividend is 352, share price is 80.40. Their current yield is 4.38%. Yield's a little higher, a little stronger. It's funny how that works. The share price has gone up and they've been able to maintain that dividend growth. That's what you're seeing right there.
Guys, there's the two stocks. We're going to feature
Well,
them on the screen. What's that?
yeah, I was gonna say I didn't even realize I right when you started talking about him mention it. That dividend's grown 80% since it. That annual dividend's grown 80%. So
That's
that's
a
10 years
nice.
time, 80% growth over 10 years. I want to make sure I featured that one too. So sorry, I didn't mean to stop you there,
No,
Lanny.
no, don't apologize at all. That's some nice thunder right there, guys. Again, you got Starbucks and you got AEP. Almost the flip of a dividend yield, 2.45 with Starbucks, higher growth rate on the dividend, 4.38% yield on AEP, slightly lower but yet consistent 6% growth rate. For which two stocks, if you were to buy one next, which one would it be?
Probably. Honestly, I was gonna say probably AEP, but I'm gonna say both. Both are looking great. I told you, I have that journey I want to get to for 100 shares of Starbucks. AEP with the yield and the metrics, they are a very great candidate, Lanny, for portfolio cleanup, where there are some stocks that might have a lower yield, but I want to put them in a quality company. AEP, even though the price has gone up so much since I bought them 10 years ago, the metrics are looking great today, and that's what matters to me. So and you pick up some yield with that 4.3%.
And that's the bottom line because Bert said so. What do you guys think? Which ones do you like between Starbucks and AEP? Do you guys own these shares? Let us know in those comments below.
Yeah, if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're not with us, you're against us. Jack.
That was Bert, the Hurt, and Lanny from the DD over and out.